All right, so heading into today, this was last week's returns, and if you kind of look across the board here, Nvidia, Tesla, Apple were the big winners. But then we saw other tech companies like Google and Meta, that really just pulled back. Amazon had a 5% pullback last week, and it's concerning a lot of folks that you look at something like an Amazon, which is down, I believe, for the year. And are the tariffs, which seem to be working in some areas, maybe not working when it comes to a company like Amazon? However, the other big movers were energy last week. And then you look at industrials, that seemed to be the area where we saw a lot of green, not just in the sector itself, but a lot of most of the individual stocks in that sector. What is this week setting up for us? Well, let's do a quick little look back and look forward. And I want to do that with basically three charts and then show you a couple of charts that I am interested in when it comes to individual stocks. So S&P 500 last week, we talked about all-time highs, and the IV was going up, but I said that was not a bad thing, that I think IV going up a little bit is healthy when you have a market that's just making new all-time highs after all-time highs this year. Fast forward to this week, and other than a slight pullback, the all-time highs continue. And you can see also that the volatility had also pulled back a little bit from what we were talking about last week. I expect this trend to continue here in SPY and the big overall indices. Looking at the bond market last week, we talked about, did TLT bounce? Did we over push to the upside? And are we going to correct, and where are we going to move into? And I had mentioned that with this pullback might take us down to around 87.90, which is the retracement area, that 38% retracement from the lows in May to the highs last week. What's happened since then? We've really started to consolidate right around the levels of around 88 to 89. That's where we seem to be right now. If the bond market were going to follow potential interest rate cuts, there's really only one way this could go. And it could become this buy the rumor, sell the news piece again, like it did with the last rate cut. If that's the case, then I expect to see this move continue to the upside. Hey, I'm Tom Gentile, America's Pattern Trader, and markets get rocky this time of the year. But this isn't my first rodeo, but the money counter is still delivering stock patterns with a 90% or better probability of profit, even in September, one of the bearish months in the market. Hey, get the patterns, the trades, and my playbook for just $9. And gold, the one of the biggest movers in terms of all assets. Last week we talked about it bouncing and then bouncing back, meaning pulling back and then moving higher. And we expected to continue to see all-time highs. I had 350 as the next area of resistance. Well, guess what, folks? We blew right through that. Right. As of earlier this morning, we hit around 353, I believe, on GLD as metals continue to move. The other metals that I completely were off my radar is platinum. Big movers up in platinum. Palladium also had big moves. In fact, if you look at platinum, it's actually had a better breakout than gold or silver. So why not trade platinum? Because it's not something that's really it has a lot of liquidity. Okay, it doesn't have a lot of liquidity. You could look at ETFs in platinum, but they too do not have the kind of liquidity that GLD and SLV have. All right, what's scheduled for the rest of the week? Well, we got earnings coming up, and we had some earnings that came out today, but tomorrow Nike is expecting 28 cents a share. We do have expectations that stock is going to move around $5, give or take. That's based on what the option traders are telling us as we come into tomorrow after the close. Wednesday, it's ConAgra. ConAgra is expecting 33 cents a share. Stock's expected to move less than $1 one way or another. But if you are looking at ConAgra, it has really had a tough go at it for the better part of the year. Again, foodstuffs have. And then finally, and I want to mention this, that Q3 earnings season officially kicks off next week. And so I'm expecting as we get into Q3, the number of earnings, the number of companies reporting earnings is going to skyrocket, especially after the second week of October when we get into Q3 earnings. And we'll have more of this kind of stuff coming up week after week, especially with what the option traders expect the moves are likely to be on these stocks. So, where are the patterns? Well, October has been a month of surprises typically when you go back and look at decade after decade, going back into the 80s. But in the last decade, it's been really a month, 9 out of the last 10 years, of higher lows and higher highs. I expect that trend to continue. We've got monetary policy that's on the side of the market. We've got trends on the side of the market, as well as seasonal bullishness. And, you know, the last piece that I want to mention here is that the chances of recessions, when you take a look at predictive models like Kashi, the chances of recessions have actually creeped up into the 90s. Let me tell you this, the market knows this, but the Fed knows this too, and it wants to get ahead of that. They're trying to determine exactly how to do that, maybe injecting more money into the markets. But this kind of action usually creates higher markets. So keep that in mind as we go into October, November, and December.